Hi, I am Vijayanand. Today we are going to discuss about corporate accounting. In corporate accounting, today's session is we are going to talk about business and types of business, characteristics of business, that and all only. Okay, first we can see what is business. Business is an entity which is for profit and not for profit organizations. For profit organizations has a main objective to give only profit to gain profit, and that is their ultimate goal. If you see Adani Enterprise, Reliance, Tata, these and all profit enterprise, and you can see the cooperative banks, trust, NGOs are not for profit organizations. The not for profit organizations has a main goal to improve the society, culture and traditions, that and all. If we go with types of business entities, we can see that first of all, single or sole trader business entity. It is a business you are seeing day to day life, like coffee shop, or street vendors, vegetable vendors, like that, who will control their own business. There will be only one person who will control their business. There will be no seniority or partnership. Anything will not be there. The whole risk and profit will be taken by the particular person only. If you go to partnership, there is a group of people who join together and invest their capital in a equal manner, or in a ratio also, and they will separate their profit on a ratio or equal profit only. They did not want to form an agreement, or enter into a contract, but it is advisable to enter into a contract. For sole trader, it is not necessary for any of the legal document. They need not to be entered, as it is going to be done only by them. If you take HUF, this is a separate type of entity where it will be controlled under the Hindu Act. Uh, this is a group of family. We can say it's a family business. As two or one or two Hindu families will join in this business and will manage this. All of the family members will be a partner of this business. The person who controls this business will be called as a karta. Okay, and even if a male child or a female child born, on the date of born itself, they will be a partner of this business. Okay. Other thing, we can see the types of business also. If we go to types of business, there are several type of business. First of all, we can see statutory business, government company, foreign company, holding company, subsidiary company, registered company. Under registered company, we can see limited company, public limited company, private limited company, unlimited company. Under unlimited company, we can see private unlimited and public unlimited. If you see to statutory company, it is made up of a special act or regulation made by the governments, like SEBI, RBI, that are all under statutory companies. And we are also having a category of company as chartered company. We want to see this in a real time basis, as it is formed by the UK government as a East India Company while they are ruling India. Okay, and government company is a company which holds more than 51 percentage of stake in a company is called a government company. The parent will be a government. You can see the parent and subsidiary company will be discussing it in later, as the parent will hold more than 51 percentage of shares in that company, or will hold voting rights in this company. Same as government company will hold all the powers towards the company. It will have 51 percentage of shares in that company, more than 51 percentage of share in that company. If you take foreign company, the company which has a head office in foreign and operating in India or other company will be known as a foreign company. Like we can say HSBC is a foreign bank. It is also a foreign company, and we can see the another type, holding company. Holding company is a parent company, is also known as parent company, which holds 51% more than 51 percentage of stake in another company, and controls the overall structure and procedure of that company. It will have a significant influence and more than an influence in voting rights also. The subsidiary company is simply a company which is being controlled by the parent company, is called as a subsidiary company. Whereas you can take registered company. This registered company is a company which will be registered under Companies Act. Under limited company, we can see that public limited, private limited, and unlimited company. Public limited companies will be named as a LTD, and under the name they will, you can see that LTD. Like if you take Adani Enterprise, they will say Adani Enterprise Limited, something like that. Okay, this public limited company shares will be issued to the public, and any public will can buy their shares and hold their shares for a long time. This will be controlled by SEBI, NS, and under the exchanges of NSE and BSE. And whereas we will go to private limited company, it is straight opposite to the public limited company, where the public cannot buy the shares, and the shares will be distributed among their members only. It will not be issued to the public. For them, it will be named as PVT Limited. Unlimited company, where this type of company is very limited in this current scenario, as the uh, we can say that their capital and the profit and loss will be unlimited for us. If the loss is heavy, the creditors can take their partners own asset also. They have the right to take their own asset, partners own asset also, whereas in a limited company they cannot take. Up to their share only they can claim for that. Okay, then we can see the differentiation between private limited and unlimited public limited companies. In private limited, minimum number of members is 2 only, whereas in public limited, minimum number is 7. In private limited, maximum number is 200, whereas in public limited there will be no restriction, as many public, in crores of publics will be invested in the company. um, in private limited company, they will not issue a prospectus is nothing but an invitation for the company, for the public to invest their company. As the private limited is restrict to issue, invite the public to the company, they will not issue prospectus. This will be mentioned in the articles of association. Whereas in public limited company, they will issue prospectus and invite the publics. Transfer of shares or debentures will be restricted in private limited company, whereas it will not be in public limited company. For public limited company, the company can start to run their company as soon as they get a certificate of incorporation, whereas in public limited company they should receive certificate of incorporation and also the commencement of business certificate. In private limited company, minimum of 2 directors should be there. In public limited, should be minimum of 3 directors. In private limited, there is no restriction for managerial remuneration, whereas in public limited there is a 11 percentage of their profit to the managerial remuneration, which will be taken in upcoming sessions. Okay, these are all the general view of the public and private company and overall business. The business, you can also say it can also be a big company like Tata, Reliance, Adani, something, and it can be also lower to the coffee shop, tea shop, or street vendor also. If we will be mostly talking about as corporate accounts, will deals with the greater companies like public limited companies only. We will also not see in with the private limited companies. In public limited companies, they will issue shares to the public and raise fund towards this. By way of giving the shares, they will give a part of ownership to the company, part of a company. If the company is not interested in sharing their ownership, they will give debenture. It is nothing but a loan, which is received by the company. The loan is received from the public, neither from bank. The debenture will also consist of same percentage of interest the company will also pay, but it will paid by given by the public, not from the bank. Okay. In issue, we can see that first of all, when the company is issuing the share, this will be called as an IPO. If the company is further on issuing the shares, they will call us FPO, which is further on public issues. And in types of issue, you can see IPO, rights issue, bonus issue, split of shares, QIP, some conversion and debentures. We can see conversion of debenture, conversion of preferences. In debenture also there are huge number of types of preferences, and in debenture also. We can see the types of preferencer also. Preferencer is a type of shares. First of all, you can see that there are two types of shares. First is equity shares and preference shares. Whereas in preference share, the shareholders will have a preferential right over the company, like fixed number of dividend they will receive. The dividend is nothing but a share of profit of the company. There is a fixed percentage, like 6%, 10%, like that. It will be there, and they will have a preferential right, but they will not have any voting rights in the company. Whereas in equity shareholders, they will have a voting rights, but they will not have any preferential rights towards the company or dividend. Uh, if we take preference share, there are many types of preferences, like preference cumulative preference share, non-cumulative preference share, participating preference share, non-participating preference share, redeemable preference share, non-redeemable preference share, convertible preference share, non-convertible preference share, guaranteed preference share. If we take convertible preference share, it is a separate topic we can see in like financial instruments. It will be a compound instrument, as the preference share will be converted to the by equity. Okay, if see IPO, and IPO can be issued at a premium or par or at discount. As per Indian Companies Act 2016, the discount is being restricted. Okay, if the company can issue at par, as for namesake, we can say that per share can be as a 10 value, but that is named as a par. If the company's face value is 10 and they are issuing at 20 rupees, then it will be called as a premium. Mostly you can see the premium only. If you want to see the face value, you can see it some there in the investor presentation also you can see that. The premium, mostly the transfer will be done on premium only. Order share capital. Second type, order share capital is a maximum share capital that the company can issue to the public. And issued share capital, it is the total number of shares capital which is being issued to the public, either in the way of public issue, right issue, bonus issue, employee stock option, or any other method. Okay, then subscribed capital, it is a capital which is being subscribed by the public, is known as subscribed capital. Paid up capital, all the subscribed capital may not be received by the company, so the total number of paid up capital will be known as a paid up capital. And reserve capital, the company can make a call, and call money, we will say that call money, as the face value will be 10, they will call as for an application, give 2, and an allotment for 2 rupees, and for first call 2, second call 2, and like that. When the company is calling, and leftover call is called as a reserve capital, which will be called at the time of liquidation only. If you see employee stock option, it is the share which will be given to the employees, mostly for M plus or D plus grade employees will receive this. The company will issue their shares to the employees, and gain the and receive their money in discount also. Discount only, mostly at discount, sometimes at premium also. Whereas you can say Swati equity shares. In Swati equity shares, it is a share which is given not for cash, but other than cash. Like if a company is buying asset or something else, they will give their share instead of giving cash, and receive consideration instead of cash. They will receive asset or label something, anything else. For issuing Sweaty reset, they should need to pass a special resolution, and it should be discussed within the board meetings also, and should be accepted by the all the directors. it is called as preference. These are all the types of issues. We can see in depth of issue of SAS in the next session. Please give your comments and comments below, and share this video to the persons who are interested and in need of this video. Thank you.